Good evening, guys. Welcome to my YouTube channel. My name is Isaac Kamaldin, and this is the segment of my YouTube channel, the Trade Trends episode, where I come to analyze the forex market and give you guys the potential trading opportunities in the market. So we are going to kick off with the GPPAUD. So actually, what happened on GPPAUD was that let me scale over to the monthly time frame and see for the bigger picture of what's happening in the market. So this is a double top. This is a double bottom on the monthly time frame. The first leg was at 2017 and the second leg was at 2023. As you guys know, the rule of chart pattern is that if at all the market is not going to hold, it will at least come to the neckline to test the neckline before going anywhere else. So 2.06500 is the neckline. So our next level target from the monthly time frame perspective for GPBAUD is 2.06500. So how we can't just enter from here. We have to scale down to the lower time frame and find trading opportunities. So let's go over to the weekly time frame and see what's going on the weekly time frame. So the thing is that on the weekly time frame, there is sort of like there was a level. I do the level here. As you guys can see, this is the level here. The market broke through the level, came back to retest it, and formed inverse head and shoulder and form inverse head and shoulder, which we are supposed to be on our way to the upside, but the market is currently stalling around there. So as you guys can see, the market formed double bottom, came back to retest, and we are on our way to the upside. Although I'm not in this trade yet, I'm still fine for well, I'm still finding trading opportunities. But as you guys can see, everything lined up pretty nicely just for the way all the way to the upside. So what's happening on the daily time frame? If you guys can see, there was a double bottom, the break of the double bottom. The market came back to a test on the neckline. It is almost at the 100% retracement. I would have just entered from here, but I entered there. The market came back to retest, and it took me out for break even and spike all the way to the upside. I've not been able to get into this trade. I'm just waiting for a nice pullback for me to get into this trade. Well, as you guys can see, there was a break of the counter trend line. The market came back to the test on it. So this is the 100% retracement, which the market is still have about 100 pips more to fulfill. So we just have to chill with that. So now the next thing for us to do is to scale over to the 4 hours time frame and see how we can be profiting off it. As you guys can see on the 4 hours time frame too, there was a break of the counter trend line and the level. Although I was about to short from here, so I shorted the market. I sold the market around there because of this. I don't know if you guys can see the bearish engulfing candle. Like my hope was that the market should come around there, but to come to this demand level here, but I made a mistake. I shouldn't hope. I should just do what the market tells me to do. I shouldn't just hope in the market. It is a mistake I made, and I promise just to learn from it because the market has taken my money. What I will have to do now is just to chill and wait for a nice pullback. So hopefully I can make back the money. I'm not revenge. I'm not revenging. I don't want to revenge trade, but I'm just here to make money. So hereby I'm just going to do what the market tells me to do. So what am I expecting on this trade? The market has took out the previous support. It is almost at the 100% retracement level, as you guys can see. But then we still have about 100 pips more to go. And what I would just love the market to do is to come back to this level here, to this demand level here to fulfill it. And if I should point my Fibonacci level from swing high to swing low, as you guys can see, it is right on the 0.618 level. You guys know how powerful the 0.618 level is. So I will just be watching it closely. But I would have loved for it to come to the 100 to this demand level right there, then we will shoot all the way to the upside. But if the market doesn't do that and went back to the straight to our 100% retracement, if at all the market will be going anywhere, it will at least give us a retracement. So what I'm trying to say is that if the market just spike all the way to the upside, if at all it will be coming down back, or it still want to go all over to the upside, it will at least give us a retracement. Then by then we'll be able to get in. So there's no point in forcing out trade right now. The market is going to commit to us. When it is ready, we'll, we'll be able to get in. So there's no point in forcing trade as it is now. So we just have to calm down. So what's happening on gold? Let me go over gold. So what's happening on gold? In my last trade trends episode, I explained that when the market is priced in, it is more or less like a range. It is a range, and when it is priced out, that's the breakout of a range. So how do we calculate a range? You guys can see that gold is at all time highs, but how can we determine where it is to go, like where the next level for gold? So we are going to use this particular strategy of mine. So the strategy is that whenever a market range for certain period of time, you are going to measure the amount of time that the market used to range, then you place it at the top of the range wherever it breaks out, as you guys can see. And as you guys can see how I did this nicely, so it is at 2583, and we'll round it up all the way to the to to sorry to psychological level. You guys know psychological level is a very very powerful thing in the market. It works a lot of time like crazy. So that's it on gold. So on the next level targets, but then again the gold just spiked up all the way to the upside. So I'm waiting for a potential pullback on gold to this point. So I'm waiting for a potential pullback on gold to the support of the range. Then we'll be able to shoot from there to all the way to the upside. As you guys can see, the market is right on that on the 100 the extension fib level for gold is right on that the level I told you about, 2583, that I showed you guys the other time. But we just have to round it up to psychological level, because psychological level is also a very thing that we have to consider in the forex market. So that's it on gold. So let's go over to the 4 hours time frame and see what's happening in the market at the moment. So this is like a range. We are still in the range now. So what we just have to do is to be watching closely. If the market should break out from this range, our next level target is 2,431 dollar per ounce. That's so we are going to be shorting if we should see any daily candle close below this level here, below this 2,477 dollar per ounce. So we'll be closing this trade. So sorry guys, we'll be entering this trade. So we have to wait for a daily candle close. So that's it about gold for now. So let's just watch closely, guys. This is the range. So when the market gets there, we'll know what to do. We'll come back here and like discuss about it. So that's it on gold for this week, guys. So our next pair we'll be analyzing today is Euro USD. So we are just going to go over Euro USD. So what's happening on Euro USD? Let me go over to the daily time frame. Actually, I feel I should go over to the weekly time frame and explain from the weekly time frame. Well, so what's happening on the weekly time frame? As you guys can see, like we did our analysis. This is a support resistance level. The market broke the support, came back to the test, and it is currently playing out a Fibonacci level. If you guys can see, I will use my Fibonacci level from swing high to swing low, as you guys can see, it is right on that 0.618 level. So that's it on the monthly time frame for on the weekly time frame for Euro USD. It is still bearish. It shows that it is bearish. We are not on our way to the upside. The only thing that can make us to be bullish on Euro USD if we should take out this 1.12733 level, but without that we are still bearish, guys. So I'm just going to go over the to the daily time frame and check the immediate trend of all the overall trend. So so let me go over the before I go over to the daily time frame, guys. So our next level, the market is here to reach, but like we said, the market is bearish. But then again, the market is here to reach to test the resistance level, or we can actually revert to this as a range, because if you guys can see, like from here to here touch the bottom of the range, and so it will at least, if at all it will be coming to the downside or it will be breaking above, it will at least touch the 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 upside, the resistance of the range too, the resistance of the range to the upside of the range, which is 1.2, 1.1 to 3, 1.1 to 733. Sorry, guys. So that's our next level target for Euro USD presently. Our next level target for Euro USD presently is 1.1 to 733. So how can we place? We can place trade on weekly time frame. Likewise on daily time frame. We have to scale down to the lower time frame and check the immediate trend of all the overall trend. So what's happening on Euro USD. As you guys can see, this is our overall target for Euro USD, but the market is currently retracing. And if you guys can see, there was a break of the counter trend line. The market came back to retest, and so if at all will be going all the way to the upside, it will at least come back there to form a double bottom or come lower a bit for like a bigger pullback. Because this is let me explain. I know you guys will be confused. The thing is that the overall trend for Euro USD on the monthly time frame is bearish, but on the weekly time frame is bullish. Because of this, it is coming to test the resistance of the range, which is this 1.1 to 733. But if you should come to the daily time, to the 4 hours time frame, it is bearish, but it is not really bearish. It is just coming for a retracement to go all the way to the upside. So what's happening? The market broke, this is like a head and shoulder. The market broke through his and the counter trend line. I was supposed to enter from here, but the candle closed very big. So if I should enter from here, my stop loss will have to come above here, which is not even up to 1.1 risk to reward. So that's why I did not enter the trade. But then again, the market came to this support level here, and it is currently testing another Fibonacci level too. If you don't understand, just get to look at the chart. If you understand price action, you are going to definitely get what I'm trying to say here. So the market is currently testing the 0.618 level, but it is on its way to the downside. So what are we going to do? How can we profit, or how can we profit off it? So we are just going to go over to the 2 hours time frame to see what's going on and how we can enter. So this is the Fibonacci level, which is about to play out right now. So it is currently playing out, but there is a minor level that holds uh this the market. There is a minor level that is holding Euro USD from coming down. So what we are going to do now is to wait for a a bearish engulfing candle. If we should see a bearish engulfing candle that engulfs this green candle, we are going to sell. Like, I mean, we are just going to sell. But if we did not see that, what we are just going to do is to sit on our hands. Our stop loss will come above here. It will be something like this. That's if we should see a bearish engulfing candle. So this is like 1.5 risk to reward. So if you are risking 2% on your trade, you will be making about 3% easily on this trade. So like I was saying, so if we should see a bearish engulfing candle that engulfs the green candle, there we will be selling. But without that, assuming the market is still want to like go all the way, if the market should go all the way to the upside and forms something like a double top from here, then we'll be selling from any bearish candle, reversal candle that we see, either at this point there or at this point there, we'll be selling, guys. And our stop loss will have to come, if we entering from here, our stop loss will have to come above this level here. But if assuming it is here that we'll see the bearish engulfing candle, our stop loss will have to come above here. So that's it on Euro USD. If that did not play, it definitely the two, one of the two will have to play out. So if the market, if this trade didn't form bearish engulfing candle, we just have to sit on our hands and chill and wait for this to form a double top. And you guys know the rule of a double top. The rule of a double top is that it is very, very, if we should see a double top, it will at least come to the neckline. That's very, very sure. So, but if a double top breaks the neckline, definitely it is going to trend for the amount of time of from the neckline to the double top. So I don't know if you should get what I'm trying to say. I mean, if the market should come back here and break this neckline, the market is going to trend for this particular time that it's used to trend. Like that's what I'm just trying to explain to you guys here. But then again, if the market doesn't do that and the market forms a double top here and we see any bearish engulfing candle, we are going to enter our first level targets for it to be at the neckline here. So we just assuming we'll be entering with um if you are entering with two lots, the first level target for the um will place it one lot. That will be two trade and like one lot. So the first level targets will be here, will be at this neckline here, and the second level target will, like, we'll just hold it here. So we'll be looking if we should, like, if we should see any reversal pattern, any candlestick, because that's like, you know, one thing about this market, if you should understand market structure, supply and demand, and the psychological, or the psychology of candlestick, because the psychological of candlestick is very, very important in the market. So if you should see any like reversal candlestick pattern at the 100% retracement, we are out. But if that doesn't happen, we'll wait to take our profit at the extension level. So that's it on Euro USD, guys, for this week. That's it for it on this week trade trends episode. So I'm just going to urge you guys to subscribe, like, and comment on my video, so you can encourage me to make more videos like this. Like I promise you guys, I'm going to do a video on how you can start trading from scratch, which I'm still going to do. But then again, you have to encourage me on this source. So kindly smash the subscribe button, like my videos, and comment your thought on this trade. If you feel my analysis is wrong, comment. Let's rub minds together. So that's it on today's video, guys. Thank you.